Hello everyone and welcome to our new webinar. It's Monday, November 11th, so hope everyone is doing fine. Just let me know if you can hear my voice, if you can see my screen, please. Exoac is here. Professor, please do in-depth analysis of the S&P 500. Yes, I will take a look on the S&P 500. Joanna is also here, Enes is here. Everything is fine. Okay, just let me adjust my table here. Okay, Tilem is also here. So thank you everyone for being here. As you know, we have a pretty volatile moves, pretty interesting price action has been happening through the weekend on cryptocurrencies. So as always, I will walk you through some of the major markets that we are covering in our services. And because we have this kind of a volatility, I want to invite you to check our services for crypto or FX. On FX, we also obviously cover gold, S&P 500 DAX and other important markets. So you will get 2 months for the price of one. Okay, so we have this exclusive offer going on right now for new members, of course, because volatility is huge, and I'm sure that you want to be updated with our charts on a regular basis. So maybe that's now your chance to grab this offer. By the way, if you're a first-time visitor, make sure to subscribe to our channel, press a like, and leave me any kind of questions, comments below this video, especially if you're watching recording later on. So what's going on? As you know, Trump has won the US elections, and this has caused a massive risk on flows. A lot of sentiment is moving into some extremes, not to some levels where I would be expecting any kind of reversals, but we are definitely seeing some very interesting and sharp moves, especially, as you know, on cryptocurrencies. Also last week Fed has decided to cut rates as expected, but somehow he was worried about inflation. Strong economic projections for 2025 can definitely bring the inflation back to the upside, and in such case you obviously want to fight inflation with the higher rates, and that's why US rates are also moving to the upside. Okay, so we will see if maybe Fed will have to slow down this current dovish approach. Someone is asking for Ethereum. I will also look at Ethereum a bit later. Okay, so I want to look at this chart. I'm not sure if I showed you this chart of Trump and Biden compared to the US dollar last week. I think I made a video analysis. Okay, anyway, I will cover it once again here in this webinar. So earlier today, I was looking at the price action from 2016. Okay, I was wondering how dollar actually moved as soon as the results started to come out, and it was evident that Trump will got the elections back in 2016. And back then we have seen dollar that was moving to the upside, which by the way is here in black. At the same time, stocks also were moving higher. Here's the S&P 500 in red. But then in a few weeks, in December, okay, of the same year, we have seen the dollar has stopped out, and what this caused is even more upside on stocks. Okay, so when you have US dollar moving to the upside, stocks trading at new all-time highs, and then what happens, a lot of traders, investors are watching these prices, and sooner or later they want to get involved because of the FOMO. Okay, they don't want to miss this upside potential. So what happens, a lot of new inflows occurs, and this on the other hand will be visible through the dollar cycle, because dollar will come to the downside. Okay, that has been the case through 2016. So again, during Trump victory in 2016, we have seen dollar and the S&P 500 moving to the upside. As soon as the dollar topped out, the S&P 500 and stocks and other markets just exploded to the upside. So I'm just wondering if now here on the chart on the right, we could have something similar. Okay, you have US dollar moving to the upside, you have stocks moving higher. So once again, I'm just wondering if maybe dollar could see a potential top formation going into this December, or at least maybe just some temporary resistance can be found in December. Then in my opinion, stocks could even extend much higher, and this could cause some euphoria going into the end of this year and start of 2025. But as you know, if you go into some very extended sharp moves, blow off moves here at those highs, if that would be the case, it means that, and too much optimism will be around the stock market and other markets, it could be the completely opposite outcome in 2025. Because if something moves just to some very crazy moves occurs, these volatile price actions can definitely be reversed when least expected. And I think that this is very possible in 2025. Now, also, that's the chart here. It's not my chart, it's from Oanda. You can check this address for more details, but I think that that's pretty interesting. Okay, so what we are looking at here is Republicans and Democrats, they mandate compared to the dollar moves, and you can see that when Trump was in office back in 2016 to 2020, what we have seen is the dollar actually slightly moved to the upside, but then it reversed lower. Okay, and now during Biden mandate, we have that dollar is doing quite well. So if we again consider what may happen during Trump presidency, well, I would not be surprised to see a reversal to the downside. In fact, the Elliott wave pattern suggests that this is possible, okay, especially if we consider what has happened here with in 2016. So now if we look at dollar index wave structure, okay, you can also see that we are seeing a very nice move to the upside on the dollar, and some very nice and strong push is happening right now since the US president was elected, Trump, and now we are seeing price moving into some potential resistance levels, which I think can be reached in the next few weeks. And maybe by December we will run to this 107, 108 resistance area. Why I think that this can be very important resistance area? Because still, don't forget, on this drop from September of 2022 highs, we have these 5 waves down, followed by a counter-trend movement that is now in play. So I think that that's an ABC formation. Ideally, wave C is sharp, it's impulsive, and can reach the levels of wave A here. But if something happens here and I'm wrong and market comes down, dollar comes down a little bit earlier, then maybe a triangle is still possible here. But for now, because of this first sharp leg here in wave A, I think that ABC rally to this 108 is much more appropriate. So again, Elliott wave formation suggests that there can be limited upside with an ABC move, right? So in the next few weeks, maybe, who knows, maybe this will extend till January when Trump will finally take office. So in the next few weeks, maybe few months, we potentially will see a top formation on the dollar, and this could suggest that we will then start turning to the downside on the dollar, like it has been the case in the previous cycle of Trump presidency. Okay, and this also suggests that stocks can then push even higher, could move even stronger. Okay, if you look here now on the S&P 500, of course we are running here very sharply, but stock markets, as you know, can sometimes also make some very extended legs, sometimes even extended fifth. I'm not sure if that will be the case here right now, and even if dollar would come to the downside, even if I say that there can be much more upside, some very sharp move higher on stocks, it's very hard to play this, okay? Because if I'm, let's say that I'm looking for I'm swing trader and looking for some potential setups here, that's not the best place to look for entries. You clearly want some pullbacks, okay? So if I will be looking for some, let's say, for any kind of a trades that could last for months. Of course, I want to see higher degree wave 4 pullback, but as long we have this current cycle going on, maybe there will still be a retest of this higher trend line here around 6,100, and then let's see what happens there. Let's see if our if dollar would really come to the downside, and we maybe even see a throw over here. Okay, but when it comes to trading or in investment perspective, you certainly, and you are not involved, let's say on stocks, and you are waiting on an entry, unfortunately I have to say that it's much better and safer play to wait on these pullbacks, wait on next wave 4, because chasing up here, it's definitely too late. Okay, it's also the same story with cryptocurrencies that we will focus also a bit later. Okay, now if we take a look on the 10-year US notes, we adjusted the wave count here, because as I said, dollar index obviously still has room for more upside. So on the opposite side of that, because of expectations that economy will do well during Trump presidency, and because of his policy actions, and of course this keeps US yields moving to the upside. So maybe this pattern, this cycle will last till the US notes finally hits new lows here. This is actually adjustment contract changes. It means that it's slightly different from continuation contract because there are no gaps. Okay, it's much clearer wave structure and much more appropriate price action, I should say. Okay, so here we are expecting more weakness, and especially once we reach these new lows, that's when dollar can finally maybe change its trend and maybe turn to the downside. Now earlier we talked about S&P 500. Now German DAX is also, as you know, has seen some retracement. As you know, maybe Trump's policy is not the best for Europe either, not only for China. So that's why we have seen some back and forth moves on German DAX. But when I was looking at the price action today, when I was making updates for members, I just realized that that's still basically a sideways price move. Okay, it's not something that you could call as a confirmed top, especially when you have price still trading above the previous highs. Okay, so certainly that's still an uptrend, and I don't want to say that that's a top in place. So I adjusted the wave count, I looked at the line chart, and maybe that's even still a very possible wave count where it shows a running triangle here in wave 4, and we can see maybe a bit more upside. So I'm looking for German DAX maybe to see another push higher before we may eventually complete this whole cycle up from August of this year. Also, if we look at the euro dollar, as I said earlier, it's always very important to just, whenever you see this kind of a sharp moves, okay, to zoom out, to check where are the big levels, to check what are the higher degree trends. Okay, to not be confused if you see a sudden change in of this dollar trend, let's say in the next few weeks. So it's better to be prepared and keep an eye on a higher degree time frame charts and levels, especially when you have such an extended moves like we have right now on the markets. So with that being said, looking at the euro dollar, okay, I'm still sure that if you're familiar with the Elliott wave principle, okay, that you see this rise from 2022 as an impulse, right? So after impulse, you would expect that market will slow down in 3 waves, in 3 phases. So that's the first phase, wave A, then you have a wave B, and now you are expecting a wave C to the downside, right? So what happens then after wave C? Well, again, cycle can change, and when this cycle could change, well, keep in mind that ECB is now still looking to cut rates. I think that there were new comments just earlier from some of the ECB members that there is no reason why not to cut rates on the next meeting. So this definitely keeps euro dollar under bearish pressure. Is also one of the reasons why dollar index is keep pushing to the upside, because of the calculations that dollar index is not equally weighted. Obviously it has more of the euro based on measurement. So that's why it's also very important to keep an eye on the euro dollar itself. But when I look at the whole structure, I would not be surprised if we complete this cycle, let's say in the next maybe 2 months, and then we start seeing again push to the upside. Of course, we firstly have to retest these levels. Okay, that would be a very important level. I'm sure that a lot of traders, investors will start looking, maybe even mainstream media. We will know that they will start calling, who knows, euro dollar even breaking back to parity or even touching these levels, and that's when we should be aware of the opposite, especially when this kind of a sentiment will be visible through the mainstream media. And also, I said earlier, I forgot to show this chart, is that if you are not familiar with the Elliott wave principle, well, that's the most basic structure that we are currently tracking on the euro. So you have 5 waves up, which is impulsive directional trend, and then you have a counter trend movement, which is just a pause. So you have like 5 steps in front, 3 steps back, 5 steps in front, 3 steps back, and that's how we try to identify these corrections and these impulses within the higher degree structure, because this will allow us much better positioning on a smaller time frame. Okay, especially when we will assume that trend, higher degree trend, has resumed. So after this wave sit down, we will expect a new turn to the upside. Okay, but for now, obviously there is still room for more weakness. If you're more like a short-term trader, now there's still 2, maybe even more percentage room available here to the downside. Looking at maybe on the 4-hour time frame here, notice that I firstly actually thought that that's a wave, end of a wave 5, and that we are going to see ABC rally back to this 109.40 level, which could be quite nice resistance. But now we are keep moving to the downside, so looks like that we can be headed straight here below or to 106, and then if we can break this level out, can be headed even lower. But don't forget, we have the US inflation data also this week. Let me check when. It's on Wednesday, 2.4, so no change are expected here from the inflation, and we will see if maybe prices could stabilize a bit ahead of data. Also today we have some holidays, not we, but they have some holidays, Veterans Day in the US. Stock market still open, bond is closed, so still maybe not the same trading conditions as usually, and that's why maybe these current flows could be even reversed, or we can definitely stabilize a bit around 106. But if you consider the substructure of a fifth wave, well, to say that wave 5 has come to an end, well, to label it here, well, that would be wrong, because wave 5 should be made by 5 subwaves. Okay, so maybe even some kind of a wedge formation here would be possible if we see some back and forth moves, but until you can count 5 subwaves within this wave 5, the trend is still down. Okay, but we are seeing some divergence here on the RSI. Not sure how significant this can really be at this stage, because moves are quite sharp, but definitely something to observe whenever you are in a fifth wave. It can be a signal that still bears can be losing strength, especially if we really will get some overlapping price action here to make sure to convince us that we are really in a fifth wave with a potential diagonal. Who knows? Now looking at cable, Bank of England, actually I'm seeing some comments coming through. Can you show I think I showed on the euro. How do you label A to B cycle? Okay, I think that's not really relevant at this stage. Possible pullback in Bitcoin before higher. I will take a look on Bitcoin a bit later, Brian. Thanks. Okay, now looking at cable. Well, Bank of England cut rates last week, and what we are seeing so far is still some kind of a consolidation. If you try to hide here, you can see that there were some back and forth moves, not really directional. So in such case, you just have to look back out of this box and look what has happened before, and you can clearly see that that was a pretty strong drop. Okay, so that's an impulse, and meaning after this consolidation will be finished, we will expect again continuation to the downside. So my idea last week was that maybe this one can be even an expanding triangle. It's not really that common. It's actually very extremely rare, okay, but can be quite powerful when it shows up to be true, okay. So in such case, even if we rally to 13040.70, I think that this will be very important resistance. Even if adjust the wave count a little bit and say that wave A has finished down here, you will still have an ABC rally back to this 13070 resistance, and you would be expecting sell-off. So I think that cable should remain on the bearish track. The only question is if we are going to see straight move to the downside from here or after a bounce. Okay, once again, guys, if you just joined us a bit later, please make sure to subscribe to our channel, press a like, leave us any kind of a comment in our chat box, or if you want to visit or join our services, we have exclusive offer going on. You will get 2 months for the price of 1. Okay, so if you are looking for this kind of updates on a daily basis, maybe that's now your chance to join us. Okay, now let's take a look on Aussie. So as you know, Hang Seng Index is still somehow slow here, okay. And if you just look at this one, you can actually see that it looks like some kind of a triangle, okay, but that was a very sharp reversal here from October highs. So it looks like that this pullback is going to be deeper, and in such case maybe even Aussie will experience more weakness. But keep in mind that maybe to be short Aussie versus US dollar at this stage is not the best idea still, because RBI is not that dovish. They are on hold with rates, okay. But technically I think that there's still a chance to see more weakness, especially after ABC rally. Now in such case, because wave 1 was extended, okay, wave 1 was extended, we can see a retracement back to the area of this wave 2 rather than only back to wave 4. Okay, so always when you have the first leg extended, that's more important resistance of a sub wave 2 of the previous degree rather than wave 4. So this 670 is a very important level. If we will see a bit more consolidation here on Hang Seng Index before breaking to the downside out of this triangle, then there is definitely still a chance to see this zone retested up here before Aussie will finally reverse to the downside. Now looking at dollar yen still it's a bit tricky. As you know, it's obviously holding to the upside, holding strong, because we have higher US yields. You have Bank of Japan that's still uncertain when they are again are going to hike rates, but definitely that's a very strong resistance here around 155, and it's even based on 2 wave counts. Now the first shows that maybe that's in an extended wave C of an ABC rally, but I'm not really that convinced that's the case, because I definitely see the price personality, which looks more like an impulse. But I know that sometimes market can surprise us, maybe even more often than not, but that's why I also prepared the second wave count, which shows that maybe that's an ongoing impulse, okay. And you have waves 1, 2, an extended wave 3, and now some pullback for a wave 4. So even this bullish impulse suggests that 155 is going 155.40 around there can be a very strong resistance, because after 5 waves you could expect a pullback, okay, or a slowdown, at least temporary top. So I still think that that's a pretty strong resistance area right there, and maybe even in the short term we will see this, if that's really wave 4, still 151, the lower side of the recent range retested here. But overall I would just simply try to avoid dollar yen, because you never know when Bank of Japan will decide to make any kind of a hawkish comments or anything, or they will again, because higher dollar yen goes, more volatile reversal may occur, okay. We definitely know what has been happening here when market was around these levels just 6 months back. Now let's take a look on gold. So what is happening? Well, today's price action is very important. Okay, last week we said when the price was up here, I warned about the deeper pullback. Okay, and the reason was not only because of gold, it was because of gold silver ratio, it was because of the wedge pattern on silver, and also more importantly it was because of dollar Chinese yuan. So if you recall, I was looking for this head and shoulders pattern. I said that even if there is going to be just limited upside for the wave C, the third leg of this free wave recovery from that lows should still show up. Okay, and we had this head and shoulders bottom formation as well, and so far we can see some very nice push to the upside, still room for more gains in my opinion. So that's why gold is now also experiencing this weakness, and possibly there's also some change in flows happening. We are seeing profit taking on metals, and maybe flows into cryptos, flows goes into stocks, and this makes quite an interesting pullback here. And what's now the most important is that you can see potentially bearish impulse from the highs. Now always when you see from a new high 5 waves down, it means that temporary top has been in place. In such case, what you would expect? Well, keep in mind that whenever there are corrections, okay, this correction should be made by 3 waves. So I think that this first 5 wave drop belongs to this ongoing 3 wave corrections. Okay, so it's an A. You will expect wave C, wave B, and wave C to the downside. Okay, so I think that much more weakness should be seen. Not sure when we will get some kind of a bounce, but certainly this trend line played a very important role, very important resistance. I highlighted this, also shared on Twitter, I think last week, and because we are now at new swing lows and falling quite aggressively, I'm even more convinced that we are stepping into the higher degree correction, and we've been talking about this levels up there that we are in the late stages of fifth wave we expect just before US elections. Now what I have on the list here, also we have dollar NOK, because today just inflation data showed a decrease quite significantly and steady inflation drop from the last few months, from 3% down to 2.6%. So maybe this can keep dollar NOK in a quite nice recovery mode here, especially if we consider that US dollar, as we mentioned earlier, still have room for a bit more gains, and we actually see some very nice ongoing, maybe already finished consolidation, because in Elliott wave terms we can count 5 waves, A, B, C, D, and E, and now we are on the bridge of this potential breakout here. So after the pullbacks, any new dips here back to 10.80, I just think that there can be more upside. We certainly expect that wave C should at some point clear these highs out from 2023 before we may start looking for this top formation up there. Okay, so this one, even on smaller time frames, we also obviously make some intraday Elliott wave analysis on smaller time frames for some of the markets as well, and we will certainly have a close eye on this one. Now let's take a look on some of the stocks. Let me check. Okay, so here we have firstly Apple still consolidating. Okay, but what we are seeing is just consolidation within uptrend that doesn't look like a top for me. As long we are above 213, I just think that there is room for more upside. Even if that will be some final push higher, at least temporary, there is room for 240 in my opinion. But once we are at that levels, I will be aware of potential reversal or at least limited upside, because if that's really a triangle, and whenever you come out of a triangle, it means that you are in a final sequence of the higher degree trend. Now also looking at here at MD. I think that we covered this one last time as well. We said that unfortunately market made only 3 waves here, 3-wave rally from that August of 2024 lows. Okay, so it means that we are in consolidation, and possibly that's even a bearish consolidation like a triangle. But even this one has some unfilled gap. You know how I look at those gaps, and these unfilled gaps can be filled before market really resumes to the downside into this wave C. So watch out for, if we see 160, don't get too excited with some kind of a bullish calls. Of course, this gap could get filled if cryptos will just keep pushing to the upside or this technology sector. Because if you look at firstly here on Amazon, now Amazon is trying to break this base channel, so obviously some very nice recovery can be happening. Keep an eye on these levels here. I will mark this as invalidation level. Okay, so as long as we are above 195, I just think that this trend is still alive. Break below it will form a top here. Now if we take a look also Microsoft, well, this one I also shared a few times here, said that was only a corrective rise from these August lows to these September highs. So it was a counter-trend movement, but notice that because this drop from that highs was also in 3 waves, it means that it's a complex correction. Okay, so we are looking now for a wave B, could be triangle, could be even something else here a bit higher, but definitely that's not a bullish pattern. It's just a sideways, maybe even head and shoulders stop formation, and we are seeing a lot of indexes, a lot of big names moving to the upside, but this one is just not showing that very nice, beautiful bullish picture at all. I just think that you have to be aware of this wave C, which certainly can show up as soon as major indexes will pull back. Now let's take a look also on Nvidia. Now Nvidia is breaking to the upside. I will take a look here on some of the big cycles. Okay, and you can see that we are actually pushing prices into a 5th wave. Now always when you're at all-time highs, there's always price discovery going on. We never know where exactly market could finish the trend here, but if we consider the FIPS and try to use it with a combination of the Elliott wave principle, then who knows, maybe even 170 can come in play. It's the 61.8% of this extended wave 3. Also, if we take a look on this 161, where are you? 161 of a wave 4, this comes in very nicely around these levels. Okay, above that you have 191. So I still think there is a chance to see these levels as long as we are above 130, but keep in mind that you are in a 5th wave here. Don't get too excited. Of course, as I said, maybe some near phase will be going on. Nvidia has been doing very well. Maybe there will be much more interest and demand in cryptos rather than on Nvidia itself, but I certainly think that in 2025 we could see some massive reversals here. So now finally let's take a look on Bitcoin and what is going on there. Firstly, as you know, we have been looking and calling for this breakout. We said October, September or November could be the breakout months, okay, because during summer this range was pretty tight for the last few months, and now finally we are seeing a very nice push to the upside driven by Trump euphoria. So we're now basically in a 5th wave. Okay, so we can see that a lot of exchange outflows into private wallets. It means that there are a lot of interest on cryptos, obviously at these levels, but keep in mind that you are at the highs. Okay, and if you're just trying to ride this trend right now from here with some big investments, just be aware that that can be a very late stage of the game. Not very late, but let's say in 2025. Now if we take a look here, okay, keep in mind that we basically were following this cycle model. Okay, we also shared this with our members. We also shared this one in our free articles and on Twitter as well. So when price was year back much lower, more than what 50,000, 30,000 lower, we said that we are in the middle of this bull cycle. And the reason was because we saw and noticed that after each drop of 70 to 85% of a retracement, the bull run has lasted nearly 35 months. Okay, so now if we compare and sum the 35 months from the most recent swing low, which was here back in November of 2022, you actually will project the time projection for this high in, let's say, from September to November of 2025. So there's still room, obviously, for some more upside, but since we are already trading at the highs, just keep in mind that maybe knows this cycle can come to an end even earlier. Nothing works perfectly and precisely, will not follow the history, the market itself. Okay, so you certainly have to be aware that we are sooner or later going to see late stages of this bull run. Okay, and if you consider that you are in a fifth wave, just keep in mind that for investments can be a bit late, in my opinion, that there will be again some massive pullbacks, but still this could be in the final quarter of the 2025. Okay, now looking at the daily chart, what's important here, keep in mind that in that wave 5 is a motive wave. Okay, what means motive wave? It can be diagonal, can be an impulse. Okay, that's how we split motive waves. And I think that this one can actually be an impulse because we have a pretty strong and extended leg to the upside. Notice that after a very nice push here above 70,000 to 72,000, what we have seen, as you know, we have been looking for a liquidation heat map. You can actually open it right now. That was up here, and when these liquidations occurred, market made a pullback. So that was definitely quite an interesting reaction, and not a surprise at all, because if the flows changes, the market will also change its direction. And now, as you can see, we are trading just keep higher, and we are not seeing any kind of a stops here. So looks like that we have plenty of room for more upside here. So wave 5, as I said, should be a motive wave, okay, meaning that after the next solid pullbacks we can expect more upside. Now if you're at new all-time highs and this previous highs has been taken out, then definitely this is the next very important level if we get a retest. Okay, so to stay in this bull run on a pullback, I want to see that these previous swing highs will hold. Maybe obviously as I said earlier, nothing works 100% right. Maybe even we can focus on these levels as well, here around 71. So this zone certainly could be very interesting for a new push higher if we will see this pullback. Maybe we will not. Maybe we'll just keep moving to the upside and reach levels here around 95, 97,000. I'm not calling for Bitcoin run to 110 to 150, 200,000. Okay, I don't want to look at the markets and trying to project something too far into the future. Okay, I want to look at the markets and go step by step approach. Okay, so my first levels are going to be around 95,000. If we see that into that area, just sharp extended leg, then of course I will adjust my higher targets and expect even more upside. But if we'll see into that area 5 wave movements and we see this correction in the meantime, it means that maybe this 95 level should be respected, and who knows, maybe even we will see some massive reversals before we hit 100,000, because everyone is waiting on this 100,000 and it may not be just in a one straight line. Okay. Now let's take a look on the Ethereum. Ethereum has seen pretty nice bounce. We thought that 2000 is a very strong, very interesting level. Certainly is a strong support, but we haven't seen this final push to the downside that would make us even more bullish here. But when we zoom out, we are still here seeing a triangle. It's consolidation, but ETF, Ethereum Bitcoin ratio is trading at some extreme lows, so maybe at some point there will be a time when the Ethereum could start making some and produce some very nice gains. But in Elliott wave perspective, this is not the case just yet, unless I'm wrong here with the triangle prediction and we are seeing break above 4,000 already in 2 weeks, who knows. Okay, then of course maybe triangle or this consolidation wave 4 is already finished. Now let's take a look also on Ripple. Ripple has seen also some kind of a recovery during this weekend, but looking at the big charts here, we are just keep compressing here, but we know that tighter the range, much bigger can be the breakout. Okay, so I'm just wondering when these altcoins may again start making some and producing some very nice gains. You can already see a lot of them moving, and we will still remain in this phase, I believe, as long the Bitcoin is in recovery mode. Okay, because there are a lot of traders, investors who are now seeking for their opportunities on other coins, altcoins that are much cheaper compared to the Bitcoins, which appears to be at the highs and quite expensive, obviously. Now also here is Solana. We talked about Solana a few times in the past. Now this one is not at all-time highs yet. We've seen a very nice break above 160, which we called as a very important level. We even retested this one, and now we are keep pressing higher. Very nice sharp move out of this corrective channel suggests that we are most likely in impulsive sequence. So I think that it's just a matter of time when we finally hit these highs here around 260. If we see some kind of a pullback, then watch this 190. This could be the very nice, interesting support on the intraday retracement. Okay, traders, I hope that you enjoyed this presentation. Once again, I invite you to check this special offer. You get 2 months for the price of 1 during these volatile price moves. So make sure to check this out. If you have any kind of questions, anything, just it's a bit late today for our webinar. It's almost 45 minutes long, so maybe you can find me or ask me on Twitter if you have something. Okay, traders, good luck this week and talk to you soon. Bye.